Hey everyone, welcome back to Talking Success. You'll probably see I'm in a different background this week. It's kind of my new sort of sub office. But if you hear some birds in the background, unfortunately I can't get rid of those. If you hear dogs barking, I can't get rid of those either. So apologies before we start. We'll try and edit them out. Anyway, so the last few weeks we've really been focused on the world of financial crime. We focused on anti-money laundering, fraud, risk, compliance. And we're taking a different slant this week. And I know, a lot of people that listen to this will know that I'm a bit of a crypto fan, not just in terms of sort of the investment side, but also as a utility, especially in emerging markets, the utility behind crypto, using it to transfer funds across border, certainly has a very interesting business case. And I'm joined today by Peter. And Peter's going to introduce himself. I'm not sure whether he's sitting in London or he's sitting in Lithuania. I can't remember where he's exactly based today, but I'm sure he'll let us know. And we're going to be talking about the world of crypto, perhaps from a slightly different lens, more on the B2B side. But just very importantly, we're not here to give any financial advice. We're not pushing any coins. We're not telling you what to put your life savings into. So this is not financial advice before we start. Neither Peter or myself, actually, I don't know Peter, but I'm certainly not a registered financial advisor, and I won't be giving any advice on this show. Mind you, the only advice I probably would give is if you want to make money on crypto, follow me and do the opposite of what I do, and then you're guaranteed to win. Honestly, you're guaranteed to make millions. Anyway, Peter, thanks so much for joining. I'd love to get a quick intro, and then we can sort of delve into our chat this morning.
Yeah, hi, good morning. Yeah, it's a pleasure to be here with you. So, I'm actually traveling for business between London, Amsterdam, and Slovenia, where in all these three countries we have a company. I work for Economi, the CEO, but to cut it short, I'm happy that we're in the same time zone. Lately, I've been speaking and being appearing on some other podcast as well, and it's always difficult to find the right time.
Yeah.
So happy to be wherever you are. I'm just happy that we are in the same time zone. This is maybe also an aspect of crypto which is not really familiar. Everybody's not familiar. It's 24/7. It's open all night long. And yeah, we'll go into discussion about what we do at Economy, but maybe just as a nice info. We have a feature that's called Night Watch, which the feature allows somebody that wants to do crypto and invest in crypto to sleep overnight. So just relax and go to sleep. I've been in the industry for like actively now as in the business from business perspective for 2 years. Before that, I've just been an investor in the space. And I'm currently at Iconomi.
Amazing. Well, listen, let's start where you just kind of alluded to. I think the world of investing in crypto, we'll talk about investment first, and then we'll talk about sort of the B2B side. So the world of investing in crypto is 24 hours a day, 7 days a week, 365 days a year, right? It doesn't stop.
Yeah.
It's not like if you're trading on the NASDAQ or the FTSE or any other indices where, you are confined to trading times. And that has its pros and its cons, right? As you quite sort of rightly said, the world of crypto, and given its nature and given the volatility, you can go to sleep at 10 o'clock at night, wake up in the morning, and I must say, I used to do this and check my phone straight away and go, "Am I a millionaire?" And then be disappointed to see that it's actually dropped 20% overnight. What do you see from your investment days, or perhaps data that you've got from the current business in terms of habits? Is this another kind of addiction? Are we going to go to? Are we going to have Traders Anonymous, or Crypto Anonymous coming up anytime soon? What do you
I
see?
think it shouldn't be a crypto anonymous. It should be trader anonymous, because I think it started much sooner than crypto. I mean, it started with forex trading. I think for the retail guys.
Yeah,
So everybody now. Sorry, I'm just gonna be simplifying things. Of course, we
please.
both know, and everybody listening to us will know for sure that it's more complex. But yeah, everybody, kind of the industry convinced retail people that everybody can do it and that it's just very simple. And of course, the whole purpose of this is like don't make money, but that's the interest of the industry. But what I see from my own experience and also from the experience with speaking with more experienced traders on our platform, or also from the data that which we, when we analyzed, we know how are people in profit, are they losing money with us, with our service. We see that it's not that simple. I mean, simply, I think actually we have a better score than forex trading platforms, because quite a lot of users are actually winners, you know. But it's also true that crypto has been on an upward trend since like last 10 years. So for just holding some crypto there, you would just make money. And maybe this is for a beginner. If I start this end, it's quite a good strategy, you know. Just don't trade it. Just look, make your choice, allocate some portion of your portfolio into crypto, choose the right coins, and yeah, just hodl for mid to long term. That's quite a successful strategy. Although there are also more experienced traders, but once you start really trading, then you know all these psychological things start kicking in, like the fear when it goes down, then the stop losses that are too narrow, and then you start losing money because you go out of the market because of your fear. Then everybody's selling, you start selling, you don't even. And so yeah, what I can say that from the data that we have from the platform is that there are a lot of psychological, no, let me call it instincts that start kicking in.
Mm,
We all get greedy. And maybe just coming back to what you said, no, you said something like, oh, you woke up and you looked at your, I know, phone most probably, and am I a millionaire? It's people's own expectations from crypto,
yeah.
which set a very big trap to their actual profits. Because people come to crypto with a 10x, 100x expectation. So if they only make 70%, oh no, that's not good
Yeah.
enough. So
You,
this is not really the usual for the other asset
no,
classes.
absolutely. I mean, you tell someone they're going to get a 70% return on initial investment within 6 months or 3 months, you'd bite their
Yeah.
hand off, right? But the minute you throw crypto in there, there's this sort of fallacy that you're going to make, 1,000 times your investment. But
Yeah,
I do think,
millionaire,
yeah,
other words,
overnight,
no, to the moon.
absolutely. I do think though that social media. Given that I follow this and I'm interested in this world, you know, when I see things on social media, and there are certain channels, probably more so than others, where you have these so-called influencers that are pushing coins and telling you that this one's going to be the next, it's going to 100x because of X, Y, Z, and this reason and that reason. It can be. Uh, because it's not regulated in terms of what people are saying, sort of financial advice, right? They always start by going, "This is not financial advice, but if you do this, you're going to make
Well,
millions," right?
yeah, well, you gave me a couple of interesting thoughts here. So first of all, about the regulation, economy is based in the UK, and we also in Europe, European Union.
Sure,
So I can compare the two regulatory approach really firsthand. And what, for example, the UK did, I think, in a smart way already last year, was started regulating crypto. Because first of all, crypto is regulated. Everybody, all the legit players do anti-money laundering and all this stuff.
absolutely.
But some of the local regulators also then start imposing additional regulatory requirements. And what the UK started with is from the consumer side of it. Yeah, so like it consumer protection. No, like you cannot use certain wordings. You cannot, to the moon. You cannot use influencers to pump and dump
Yeah,
stuff. So that's already prohibited in the UK. And the whole duty that we as a company have in the UK, and we also of course do it in Europe, is like to really try to not protect but really give info, like sound information to the users, but not, and we have the duty to protect them from making irrational decisions. So, and this is the way the regulators started approaching it in the UK. EU is lagging behind a bit on this one, but on the other side, EU has a very comprehensive MiCA directive, which basically puts on equal terms as any other financial institution all the crypto players in Europe, which is like coming in place with 1st of July this year for the stablecoin issuers, and then 1st of January next year for everything else. So we, as a crypto provider, will become fully regulated financial institution that like any other stockbroker or whomever does a similar business in Europe, in the European Union. So yeah, interesting. So
I think on that, Peter, though,
that's how I see it.
that's the crypto asset service provider, right? That's regulated. Okay, but that doesn't necessarily stop me from minting a coin on the Solana network.
No,
Okay,
let me add that. So it's not only the service provider, also in European Union, also token issuers will be regulated. Meaning
okay,
anybody issuing the token will have to simply submit the let me call it a prospect or however it's called. So basically a document saying what this is, how it works, and everything, and this will have to go through a formal process. So only this kind of tokens that will be basically, I'm not going to say approved, but issued in the right way, in a prescribed way, and that the regulator will oversee, will be able to be offered to the European customers.
but until
So
that
this is what's
happens,
happening in European Union.
yeah, but between now and then, okay, so for that regulation
Yeah.
to get passed, do crypto asset service providers take it on their own risk and their own sort of risk portfolio in terms of which tokens or coins to list on the exchanges? Or, I
Yeah,
know there are a few
definitely.
exchanges, out in this part of the world that will say, listen, we're only going to list the top 10 because of
Yeah,
liquidity
yeah.
and what have you. And we're not going to do meme coins and we're not going to do, NFTs, and we're not going to do anything like that because it's just, we're not sure that the market in this part of the world is ready for that, and it's too speculative. And does the responsibility lie for the service provider, or because of the pure nature of crypto, giving it is decentralized, actually it's kind of cave or buyer beware?
I would not say. I mean, definitely there is this responsibility with the provider of the crypto services,
Mm,
and but it's basically upon each service provider to decide what kind of risk appetite and what is actually the core offering. So, for example, we take our business seriously. So we, for example, only list 150 coins. We have a very diligent due diligence process on listing a coin, like from a legal
yeah.
perspective, token or project perspective, content perspective. Let's call it fundamental analysis, if you can say so, and then also from basically a liquidity perspective. We take care that the one of the biggest risk in crypto is you buy a coin, somebody pumps it, you kind of get stuck. I mean, you have this coin, but then you don't find a venue where to sell it. Or if you try to sell it and you have a larger quantity of it, then you will be influencing the price. The price will go down.
Sure.
So liquidity is one of the key criteria. So, for example, what we do, if a coin is listed with us, it has to be listed. It traded at least with three other exchanges where it's always going to be possible to sell it. And if we see that there's some weakness on those exchanges happening, we start a delisting process. And this way, this is the first line of defense, so the investors don't get stuck with a coin that's basically illiquid. But let me also come back to the one interesting thing you said about the influencers.
Mm,
Um, just about our business. So we are basically kind of a marketplace between very experienced crypto traders on the retail side of the business, and then somebody who is just approaching the space. And this retail, I mean, these experienced traders, what they do, they have portfolio strategies on the platform, and then people can copy their investment strategies. And what we found out is that these influencers that you were talking about, they are not good traders. They're really not good traders,
mm,
because we invited some of them, not some of them. We open for collaborations, but most of these guys, they refuse to come on a platform where their performance of their trading would be tracked transparently and shown. So there would be kind of a history of your trades,
yeah.
because that's what happens if you start having a public portfolio on our platform. So everybody else can see if you made good trades, what was the performance, there are benchmarks, and so on and so forth. And what we found out that while approaching this so-called crypto, traders that present themselves as being really good at making trades and so on social media, they mostly, and I don't recall, like, over the last 2 years anybody joining us and going public. simply because once it's always good, it's very easy to expose one good trade that you made, but you hide the 10 or 7 or whatever were the bad trades that you made. You hide the fact that you did not come into a market when before the market was going out, or that you were late in exiting the market. So I would really, for somebody not being into the market and following it closely, advise not to follow these influences, and especially the ones that you mentioned. So the ones that promote a single coin, that's already a red flag for me. If somebody is really just pushing a coin, it's really a no go.
Because I was sorry, as you were talking about sort of listing 150 coins on the platform. And there's an app that I use. I can't remember what it's called. I'm on it now just to have a look. I can't remember what it's called. Doesn't say, and it lists. I can just show you actually. Here we go, everyone. And it lists all the sort of coins, right? And this is just the last 6 hours. No, sorry, 24 hours. And I scroll and I scroll and I scroll and I
Yeah.
scroll and I scroll and I scroll and I scroll and I scroll, right? And I can keep going. And these are coins that, just to give you some idea, I look at these, right? Something called, actually, I'm not even going to mention the name, but there's one here that's gone up 378%, okay, in the last 6 hours. There's one that's gone up 485% in the last 4 hours. There's one that's lost 100% of its value in the last few hours, right? And it goes on and on and on. And I think it's difficult for someone that's coming into a market that they don't necessarily understand. You can look at the price, okay, and price is just one indication. But you mentioned a very important thing, and something I'm still sort of understanding is the liquidity aspect. Okay,
Yeah.
perhaps if you could, Peter, just dumb that down a little bit for people maybe coming into the market and have heard the term liquidity, don't necessarily understand what that means when it comes to sort of trading. How would you explain that?
um, yeah, the easiest thing to explain is like, let me put it to I don't know how it's. Maybe you can help me out. For example, there is a second-hand marketplace. You try to sell something used, yeah, and you go there, and there's a lot of offer there. You're trying to sell your old bike. There's a lot of offer there, but if there's nobody buying, you know you can put any price, and we can do an average of the offer. So everybody's like, there are 100 bikes, the average price there is 90, but what's the actual price you're going to get for your bike? It's not the 90 that it's shown on the platform. No, it's like much lower. And this is what happens with crypto altcoins, especially. We are not talking here about Bitcoin and some of the bigger coins. We're talking about the altcoins. The altcoins simply in a bear market situation like it was maybe 18 months ago or even a year ago, in that kind of market stages where the liquidity runs out and nobody is really willing to buy, so the average price a user will see on a platform is maybe going to be A, but the real value the user might get if he starts selling those coins, which is going to be much lower.
Mm.
This, of course, depends on which coin he's holding and which platform he's on, and so on and so forth. There are a lot of different aspects to this, but yeah, I would really urge users to keep this very much in mind. Currently, that's not an issue because we are in a kind of a positive crypto phase of the market. It's not really extra bullish or going up. It's kind of sideways trading at the moment, but in bear market situation or phases, this liquidity really draws down a lot. And at that time, somebody could start, trying to sell a coin, and they could not sell it if they have a higher quantity of it.
So when people are looking at their trades, or they're looking at their portfolio and they're looking at a nice graph, and they're probably looking at the price, whether it be in the sort of columns or the line charts, sort of bar charts, aren't they called? And they're seeing the price. Should they also be looking at another layer, which is the liquidity, and really keeping
Of
an eye on that
course,
as
of
well?
course. Yeah,
Yeah,
of course. Like you did before, you went to the app, you were just checking the returns column,
yeah,
yeah?
yeah.
And you were checking the 24-hour returns. But this is like the worst case to approach it. It should be a year. People should check the returns and the price levels over the last 5 years at least. This will give them indication how long has the coin been on the market. There are new coins coming to the market every day. And then the whole point of going is to see the volumes of trading. How much is the trading of this? And then they should also check if this coin is also traded on another platform, because they might, be using this app number A, but if this is the only app that offers that coin, then this is quite risky. If something happens, you don't know what the deal was between the platform and the coin there. There are no this B2B relationship between the token issuers and the platforms, and so on and so forth. So this is something, for example, that we at Economy try to prevent just by having a minimum requirement that the coin has to be listed on 3 exchanges. It had to have a minimum liquidity over the past uh, X weeks and month, and we monitor these parameters. And then if a coin starts getting a bit, weak in terms of liquidity, we put it through an organized process of delisting.
Right.
So if in urgent cases, we even sell the coins and then just convert them to Bitcoin, so that the investor at least gets some value out of it if we see. So this is something we do as a platform to really protect the users from
Wow.
getting stuck. Yeah.
I've not heard of that before. So that
Yeah,
makes sense. Yeah.
that's something we do for the retail side of the business. Where people where we have this duty to protect their investments, and
Yeah.
that's part of our regular processes.
Fantastic.
While on the B2B, it's a completely something else. There are much more experienced traders and asset managers there that do this themselves.
Yeah. Peter, at the beginning, well, near the beginning of this conversation, you mentioned this kind of the greed aspect, and I've only
Yeah,
just sort of learned that there's actually a greed index that you can kind of follow,
yeah,
and I've been looking at that quite closely and how that correlates to movement in market. Okay, so when market goes up, this is what I've seen. Please correct me if I'm wrong here. But when market goes up, greed index starts to go to sort of 65, 70, 75. And then as soon as there's a bit of a correction in the market, that drops to sort of what I'm seeing at the moment, sort of 60. And this is out sort of out of 100, right? So it drops to sort of 60. Because I've only just found this thing called the greed index, I haven't seen anything
yeah.
go
It's pure
100
greed
or
index. Yeah.
zero. Okay, I haven't seen anything on that sort of end of the scale. But is that a good barometer for people to use as part of their strategies to keep an eye on sort of the sort of consumer confidence in the crypto markets, or is this just another way to
Yeah, I would not
watch
call
trade?
it. I would not call it confidence, because this would give too much authority to this. I would really call it greed index.
Mm-hmm.
Yeah. So if it's too red, let me simplify it. If it goes above certain levels, it's simply really, really a late stage of the cycle. The prices might be inflated a lot, and then so what we see. You mentioned the strategy. I think
Yeah,
part of the investment strategy into crypto should really start from the basics. So people should first of all say, okay, what's my portfolio? Am I in stocks? Am I in bonds? So what kind of share am I willing to allocate to crypto in my overall portfolio for investment? Yeah. And then once you allocate that, which should stay in single digits. The single digits is a safe place to be. If you lose, you will not most probably not lose everything, but if you lose all of it, it's going to be a relatively small loss. While if it doubles, or if it really does the 10x or whatever expectations you come into, it's going to be a significant improvement to the overall returns of the portfolio.
sure.
So roughly, keeping it to 4% might be a good idea. There are some studies showing some ratios are optimal at those levels. But whatever. First, you make a decision. What kind of my portfolio am I going to get to crypto? Then you go into which kind of is it the timing aspect of it, and then the most one of the steps somebody should do is really the taking profit strategy.
Yeah,
I'm always coming back to the taking profits instead of the stop losses, because the retail investors mostly maybe do put in place stop losses, but they don't put in place take profit rules. We on our platform, we call this section of the platform the smart rules, where it allows really you to put in place a lot of different automations on stop losses, trailing stop losses, taking profit rules, whatever. And but it's the taking profit that's actually the important part of it. Yeah. So if it goes up a certain percentage, how much are you going to take out of those profits? Because if you don't take out, those are unrealized profits,
absolutely.
and you will most probably, if you're not an experienced investor or traders in crypto, if you've not been through a couple of cycles, bear markets, learned it the hard way, then you will most probably be too late to exit. And because most people come with these expectations, of which we talked about, like, oh, am I a millionaire? They're not going to be satisfied with the 70%, 80%,
Mm.
30%, whatever. So my advice would be really to take these fundamental strategy steps, and then one of the steps should be the take profit rules, so that some you start taking and automate the rules of taking profits there, if there will be any profits, because once the numbers and the crypto frenziness in late cycles stage starts happening, the greed kicks in, the fears kicks in, there are huge movements in price, and then it's really hard to at that time, when you see all these ups and downs, and to make rational decisions. That's why it should be set at the beginning of, and before any, even before investing the first dollar.
And I suppose on that, the taking profit side, this is an interesting kind of psychology sort of topic, really, isn't it? Because there are people that get emotionally attached to certain coins. Okay,
Yeah,
let's use XRP. Okay, and again, everyone, I'm not punting this coin whatsoever, right? But there's talk of XRP being the new monetary system, and Swift or Swift payments are going to sort of migrate to XRP into Ripple, and the price is going to be like $100 or $1,000 a coin. Okay, and when you see a bit of price movement, or when people see a bit of price movement, and maybe they've bought in at 40 cents and it's gone up to 80 cents, right? Um, there's very few of people that I've spoken to in sort of my world that have gone, "Hey, I'm going to take my profit," because they're going, "Hang on, it's gone, from, it's doubled, so it's going to like go to the moon." I know we can't use that sort of expression, but we're going to for the sake of this topic of conversation. People need to be quite disciplined, but there is this emotional attachment that goes, actually, if it's done this, oh, what's the future hold, right? But I suppose if you're building in automations to your strategies within your platform, then you're kind of taking that emotive side out of it, and it's a transaction. I think
correct,
again that's what people need to
correct.
understand, that this is a transaction. This isn't an emotive exercise.
Yeah, look, again, I'm talking here about the, let me, non-professional investors in
Sure,
crypto.
yeah, retail investors, yeah,
Come back to this. So yeah, but that's the whole purpose of this taking profit, the smart rules section that we have, and the thing that I was talking before. So to do it before you invest, before you see the charts going up or down with your real money
yeah,
invested, because once it's real money, and it might be, some people may have an aggressive investment strategy, and they have to, it when it's real money, the same charts look completely different. They have a completely different impact. That's why we always advise, look, set up your taking all these automation rules, set them up before you start putting in the money. And you said, oh yeah, people, taking profit can be also like, it goes up, let's say 10%, whatever it goes up, you just take 10% of your profits out, meaning you still have, the potential exponential growth of accumulation of the profits, but you keep taking things out while they go
yeah,
up. And that's what I'm talking now. How much to take out, at which levels, and so on. This is again more something each individual should decide. But my point is, please do it, because I can guarantee you from taking a look at the data that most of the people pay the fee, the learning fee, by either staying in the market for 4 years and then learning it the hard way, or they just set this stuff up front. There's a third way, but the third way would involve that you spend a lot of time, and I'm talking about a lot of time. You're really following the market, really following the trends, reading the news, and that's simply unrealistic to expect from person having a family, a job, and something.
yeah.
So the other strategy would just be, you do some analysis, select some coins, or maybe you select a strategy, a passive strategy, like we have a blockchain index strategy that just index the market, and you leave it there for my grandparents, grandkids, or whatever,
Yeah.
my son. So a more passive approach to investing, which is also possible. Yeah,
And
that's
I
it.
suppose that there is this question now, which is okay. So I take profits, and I take that profit in whatever currency I choose, whether it be Euro, GBP, USD, whatever it may be. What do I do with that? Now, this is assuming people aren't reliant on this money to fund their lifestyle or whatever they're saving for. Would you not? No, no, no. Let me rephrase that question. Are a lot of people then converting that fiat back into maybe something a little bit more stable, like a Bitcoin, where you've seen, as you quite rightly said, growth over a long period of time, or are they transferring it into other asset classes such as gold, silver, what have you? Are they then taking that profit, putting it back into capital markets, or what are people doing with sort of liquid funds that they've earned off the back of crypto trading?
Yeah, well, to that part of the equation, I cannot answer because we only operate a crypto platform.
Okay,
But again, I think the fundamental reason why we invest money is okay. Maybe crypto in the past, but still maybe is. As you said, some people really get attached to certain coins. There are like really some kind of a play money in a certain way for some
yeah,
investors. But so there is this aspect I think in the retail market still, which is really something irrational, but whatever. But otherwise, the fundamental reason why we invest is to generate profits. Not to just watch it go up and then watch it go down. So, but to really generate profits, and then take it out. Meaning, you just take it out and then do whatever you want. I
yeah.
mean, go for an ice cream with your kid, buy him something if you need, whatever you want. That's the whole purpose
Well,
of it.
hopefully, Peter,
If
we can
if
buy an ice cream manufacturing company. I mean, that's the
Yeah,
goal, right?
yeah. I was trying to come to that, trying to
Manage
tone it down,
expectations. Yeah,
not
yeah.
to say buy a Lambo.
Listen, Peter, when we spoke a couple of weeks ago and sort of introduced ourselves, you mentioned another part of the business which was really fascinating, and this is kind of the B2B side and the white labeling approach that you've got for the platform. There's going to be a lot of people listening to this that are retail investors, and that's fine. But there's also a lot of our viewers and our listeners who are working in the world of fintech, banking, financial services, interesting Web3 and DeFi and everything like that. Can you just talk us through this offering and how this works? Because I was kind of fascinated by it.
Yeah, I had an interesting conversation yesterday with a consultant, and when he was asking me some similar questions, and then he rephrased what we actually offer on the B two B side. You named it white label, but he actually named it embedded crypto, meaning it's basically a crypto platform as a service
Yeah.
where any business can open their crypto business on a white label, so meaning with their own brand, and we operate the technology for them. We operate also the anti-money laundering processes linked to this, and we basically enable any startup, broker that wants to enter crypto to basically launch their own business, like in a matter of I would say a week.
Wow.
It's just a matter of setting it up and so on, and of course having the right regulatory clearances and licenses. Yeah. So part of our offering is as well that we take care of everything related to regulatory reporting, AML, KYC, and everything. So this side of the business is run by us, while the B2B partner, just runs the client management, investment decisions, and so on. But the platform is basically offered with any white label,
Wow.
with any other partners brands.
And
So this consultant yesterday called it kind of, he's coming from the banking sector, and he said this could be compared to embedded banking or something like that. And I'm not an expert on that stuff, but yeah, I think that's pretty much what we offer. So it's basically financial advisors, asset managers, crypto fund managers, anybody who needs portfolio management on crypto, that he needs liquidity, needs custody, and at the same time needs all the AML clearances and processes to be run. And he doesn't have the capacity or the will, or just simply not interested in doing it himself.
Mm.
We run that side of the business for them.
And then whose responsibility is it to conform with regulations and regulatory controls in each country? Is that down to the B2B partner, or is that down to yourselves?
Definitely, yeah, definitely. The B2B partner
Okay.
uh, has to have the clearance to do it, but he at the same time is outsourcing part of his business to another entity that as well licensed to do this. So I don't know the specifics in your country, but that's pretty much how the business can be operated in Europe under the MiCAR directive, because it's a common directive covering the whole European Union.
Okay.
Yeah, and as long as you outsource it to another company, which is basically regulated as well, everything is okay.
It's fascinating. I think there's a lot of sort of crypto exchanges or fintechs that are sort of now building crypto exchanges, and there's actually a simpler way of doing this, right? With the
Yeah, yeah, definitely,
yeah, absolutely.
definitely.
I mean,
There are also other providers who offer just kind of parts of the crypto infrastructure, but
yeah,
without the license.
yeah,
Somehow I compare it with a bit with how the casinos business operate. You have providers who offer you the platform, the license, and the operations of that, while you just put up your brand, your client management, and everything else,
yeah.
as well regulated with the appropriate licenses, and the combination of two works fine.
It's a very interesting model. If people want to find out more about this, and perhaps more about on the retail investing side as well, Peter, where would we point them? And we can put some links down here. But where should we
Yeah,
point them?
just if they need some personal contact, just I'm a traditional guy, so LinkedIn.
Okay.
You will not find me really a lot on social media, but the otherwise we have
Yeah.
iconomy.com. It's our global website, and they can find out a lot of stuff there. There's a business section and a personal section, and those are the two things where they should take a look at first.
Amazing. Well, listen, I think some key takeaways from this session with you, Peter, and I thank you very much. Is don't just look at price when you're looking at trading on crypto. Make sure you look at liquidity as well. Make sure you also understand the history of the certain thing that you're investing in. Right? If you're going to go and invest, it doesn't matter what the value is, whether it's $100, $1,000, or $10,000. Would you go and invest that just because someone on social media says go and invest your money in this widget that's going to be the next greatest thing? You wouldn't, or I don't think many of us would, right? So make sure you do your own research. I think the second thing is take profits. Okay, as Peter quite eloquently said, people trade and invest to make money. Let's not beat around the bush here. So when you have made some money, take some off the table. Take some off the table and then do what you want with that. Now, whether you reinvest that or whether you use that to pay for your school fees, your kids' school fees, or whether you use that to, I don't know, do whatever you want to do, go on holiday, then, that's why it's there. And I think, the last thing is, just be mindful, I think, of hearing or listening to social media and listening to these people that claim to have made themselves into multimillionaires overnight or in a cycle. Where's the proof of that? Just because they're standing in front of a Ferrari of a nice house doesn't mean it's theirs, right? So make sure you're aware of that. And I think last thing for any fintechs that are listening to this, or anyone in the ecosystem, if you're considering adding crypto to your portfolio, then before you start building and going through that long and very expensive process, I think it's probably worth reaching out to Peter just to see what sort of services and what sort of integrations that they can do on their side. You might find yourself being able to go to market a damn sight quicker than trying to build it yourself. Pedro, I think I've caught the main topics there. Was there anything you'd like to share, kind of as a parting gift or a parting comment?
No, Thanks for having me. Really, it was a pleasant conversation. Was nice to talk to you. So yeah,
Fantastic.
that's it.
Well, I'll let you get back into your hopping between different countries, and it's nice to see you, and I hope to see you again very soon.
Same. Bye bye.
Thank you, Peter.